Hello, everyone. Welcome to the second Meet the CEO session. Very happy to be here with all of you today. I'm Alexis Le Portz. I'm a partner at Truffle Capital. So for those who don't know who Truffle Capital is, we are a fintech fund, European fintech fund dedicated to scale-ups in Europe. And I'm really pleased to be here today with Andy Flury, the CEO of our latest investment with the fund, of a company called Wyden. So maybe you can take a minute to present yourself and present Wyden.
Thank you, Alexis. Wir haben entschieden, dass wir das zweisprachig machen. Ich werde nein, just joking.
Entschuldigung, Andy.
So Andy Flury, I'm founder and CEO at Wyden. We are a digital asset trading infrastructure provider. We basically provide the technical infrastructure for banks that want to offer crypto and digital assets to their clients. To give a few names, Baader Bank here in Germany, FlatEx are clients of ours. So we're a software company.
So it's very interesting, Andy, but basically the zeitgeist did good because we've seen last year, and maybe we can talk a little bit more about it later, that digital assets is becoming more and more institutional. But how did you end up, being there today and having the product that you have with Wyden today?
Yeah, it was quite a journey, to be honest. I was a partner at a hedge fund in Switzerland for many years. We traded quantitative systematic trading strategies. We traded volatility derivatives at that time. And I was in software all of my life. And I wanted to automate the entire processes. And there was no product on the market. So originally we created a product called AlgoTrader, for us internally to automate all our trading strategies. And we were very small. We were 3 people, me and 2 developers, when we basically started the company as it is today. I still remember those days. In wintertime, I was actually up in Davos. I was skiing in the morning and working in the afternoon. You didn't know that, right?
I didn't know that. Good to know. But so it's not about digital assets so far. So when did you do the switch from, let's say, algo trader, high frequency trading for, let's say, TradFi, and when was the switch to digital asset made, and why?
Yeah, that was in 2017. Until then it was pure traditional assets, trading strategies, and hedge funds. We had requests from clients that wanted us to connect to crypto exchanges. To be fully honest, initially I had no clue what Bitcoin was. I thought it's something like PayPal. So we were convinced by clients to add connectivity to Coinbase and a few others. And fast forward now, today, 90% of our revenue is coming from the digital asset space. We raised our Series A in 2019. And then in 2020, that was probably the turning point. We signed our first bank. In Switzerland, Signum Bank and SEBA, the first 2 crypto banks, they went live and they choose us as their technology provider. And that sort of sparked that thought, maybe a few years ahead of time, banks will start to offer crypto and digital assets globally. So we shifted from a pure buy-side focus to a sell-side focus. That was quite a transition. We had to basically build an entire new product. We had to learn how banks work, how they operate. And in the meantime, we're serving double-digit number of banks globally. And we believe that the banking sector will be the biggest contributor of growth.
Which they are. I guess. So maybe as an investor, I can maybe explain why it was interesting for us, to invest in Wyden. I mean, if we look at the market today and what happened in 2024, which was a very interesting year for digital asset. Obviously, we had the likes of the FTX crash. I mean, we had our fair share of drama in the space, but still, blockchain technology, tokenization, digital asset as an asset class has been really proven to be resilient. And we've seen with the American driving the way and leading the way, that as an asset class, we have the major institutional players entering the field and at scale. I mean, the BlackRock ETF has been one of the most successful ETF launch in the world, and tokenization, RWA, real world asset is a major trend for banks. Obviously, it's going to take years, but as an investor, it was really important for us to understand and to help those big institutions to be able to enter the space. And so we invest in the pick and shovels. And basically, that's what Wyden provides. It's infrastructure for those banks. So, it's a different tech stack. Everything is very different. It's very complex. You have tons of new actors, even on the custody side. It's a complete different nature of assets. So having a player like yours that simplifies everything for the big incumbents was really important. And obviously, with the type of clients that you have as well. And we'll see, I think in 2025, we're going to have some big announcement all over Europe of major banks entering the field. I think, it's one of the mega trends that is going to happen in the next 5 to 10 years. And you're really well positioned, at least in Europe, on that.
I mean, you are one of the leading growth investors in the digital asset space, right? There are many investors in early stage, but not that many at the growth stage. You have decided to invest in the institutional side of digital asset. That was a conscious decision on your side. What do you believe, looking forward, will be the key drivers to success for the institutional adoption?
I mean, the ease of integration. Obviously, you need to offer retail investor and professional investors a safe environment. So it's all about trust. I mean, it's a fintech exhibition here, and you have fintechs which are providing technology, but obviously you have the incumbent banks and etc. They have the trust, and they have trust for many, many years. So I truly believe that the big institutions have a major role to play in finishing the legitimization of this asset class. And also, they are going to be the ones that are going to tokenize the whole world. So if that's going to happen, and history is starting to show that it's going to happen with those type of players and a mix of people like you that have the tech, master the tech, and providing this technology to those who have, let's say, the network and been operating in the space for years and years. And they need, even just for efficiency topics, they need to enter the space, they need to tokenize, and they need to be able to trade easily. So Wyden is really well placed there.
Yeah, maybe I can talk a little bit more about what we actually do. It's basically an end-to-end trading platform that runs within the bank. So we operate most of our clients on SaaS, as you could imagine. So the crypto market is extremely fragmented. There are hundreds of exchanges and brokers out there. So we connect the bank to the key trading venues. That's the original concept of the platform. In the meantime, we built a lot of capabilities that you would find in a traditional core banking system. Why do we do that? We learned that some banks will kind of mirror the crypto business into their core banking. Others do not. Why not? Because traditional core banking systems run during weekdays. Crypto is a 24/7 market. These systems need to be running continuously. The amount of market data is much, much bigger than in traditional trading. So there are certain factors for that. So we started building a lot of capabilities that you find in a banking system. That's the whole settlement layer. It's the risk management, the accounting capabilities, and so forth. So, from when we started in 2020 with Signum Bank, we learned a lot. The market has evolved a lot, and we listened to our clients. Now with the 12 banks we're serving globally, a lot of capabilities have been added to the platform. Right now, if we look at the market, digital assets, it's primarily crypto. Crypto, Bitcoin, ETH is the only real revenue stream today. Tokenization I mean, it's been around, people talk about it, bonds have been tokenized, Picasso paintings and whatnot, but it's not really a revenue stream yet because the secondary markets are still missing. Now that's coming, under the new MiCA regulation. The infrastructure, the technology is the same, it's all blockchain-based systems. So once, tokenized real-world assets will become a commodity, the infrastructure is already there. The banks that already implemented an infrastructure for crypto will be ready for the future of tokenized assets.
And I mean, you made the perfect transition for me. But what's your take as Wyden on the regulatory landscape in Europe compared to what's happening in the US or in Asia? And how, as Wyden, do you surf, maybe MiCA and all those things? Could you give us your point of view?
Yeah, I mean, we had to learn that regulation is the key driver for our market. Banks will not move unless there is a clear regulation. In Switzerland, where we're based, the Blockchain Act came in force already 3 years ago, and that opened the doors. Now we have over 25 banks in Switzerland that are offering crypto and digital assets. It took a little bit longer in Europe, but now we have the MiCA regulation since the beginning of the year, and that we could observe. Now there is a shift. More and more larger institutions are now working on their digital asset offerings. We will see throughout this year announcements of banks that launch their offerings to literally millions of customers. So there is right now a big trend behind the curtains to launch digital assets on a wider scale.
And so Europe is one thing, but what about our other jurisdiction? I mean,
yeah, there is one in particular, right?
Yeah, of course. But in the US, it's completely changing. I mean, with Trump and the whole administration that is put in place, they have even somebody who's in charge now of AI and crypto that's made big announcement last year. We even have jokes of the Doge. I mean, obviously, it's a wink to what's happening in the blockchain, but what's your take on what's happening in the US, and is it a chance for us as well, as Europeans?
I believe it's a huge chance. I mean, look, for the past legislation, nothing happened. It was completely frozen, no development. The SEC tried to stop everything there were big lawsuits. It was basically regulation by enforcement. And now with Trump, there is changes almost on a daily basis. Some are positive, some are less positive. I mean, it sounds like the US is now opening up. Right, the SEC is looking at the new regulatory framework for banks. You see more and more announcements of big institutions looking to enter into the space. I think the advantage we have here in Europe and all the companies here in Europe, that we had the opportunity to build up our experience over the past few years, right, with the bank. I mean, to make an asset like Bitcoin compatible with the traditional banking is quite a step. I mean, we're still looking, Bitcoin being fully decentralized. We don't know who started it. Moving that into traditional banking is quite a huge step. In traditional banking, the core banking system is the data master, is in control of everything. With blockchain, that's not the case. The blockchain itself is the data master. So the core banking system is a secondary system that just mirrors the data from the blockchain. That's a huge step. And our European banking landscape learned to deal with that. You had not just the people in the trading space, in the trading departments within the banks, learn to get comfortable with this new asset class, but also compliance and risk, legal, all these different departments. And that was quite the development. And the US doesn't have that yet. In the US, this is completely fresh and new. So I think us, Europeans, European startups have quite a big opportunity in the US market.
And, just Europe, or maybe the neighbors of Europe, can you just tell us what are the really interesting markets for you? I mean, Obviously, Germany is an interesting market, France is an interesting market, but it seems like Turkey, for example, is a market that's quite innovative as well.
Exactly, yeah. Turkey is a big market. You wouldn't think so. In Turkey, every second person has bought crypto before. Take that. Every third person has an account with Binance. Why is that? I think it's quite obvious. The reason. And same as Europe, Turkey also launched a new regulation on January 1st, which is more or less a carbon copy of the MiCA regulation, so very similar requirements for the space. And this opens a lot of opportunities. Now, Turkey is not Europe. Banks are a little bit different, so we had to learn on how to work with Turkish banks. There are also some very strict requirements on how to operate such a system. So, but it's not just Turkey. Brazil is another market, also upcoming regulation. UAE. Dubai, same thing. I mean, for us as a company, we learned that we need to watch the global regulatory landscape and focus on those markets where a new banking regulation is coming up.
And in terms of product, the product itself, what makes the Wyden products sexy for banks? Why do they come to you, and what are the killer features that makes them choose you?
I mean, look, ideally, a bank that has decided to launch crypto and digital assets, they want to change as little as possible in their existing landscape and their processes. So we need to adapt. We need to make crypto banking compatible, right? So what are key elements? Obviously, the integration, the API integration need to be as standard as possible. All the processes that a bank has, that's your treasury management, your settlement, your risk, your compliance, need to be mirrored into the crypto space. So, what we do, we basically try to give them a automation platform, process automation platform, that looks as closely as possible to what they're already used to. So, the actual trading part, the connectivity and execution, that's God-given. The bank trusts that we can do this. But what they're really interested in is, how do we manage the risk? One thing our space has learned after the famous US FTX is that this is a risky space. If you leave your assets on an unregulated exchange, they might be gone. I remember we had a US fund, 100 million fund. They lost 90% of their assets when FTX blew up. And that, I think in Europe, the banks have now seen as an opportunity for them to offer this service in a safe and secure way. After all, what have banks done for over 100 years? It's safekeeping clients' assets. That's what a bank is good at, with the Chinese walls. And this personally, I see as the big advantage for banks, not just in Europe, but globally, to offer these sort of services.
Absolutely, and now I'm going to talk to you as a founder, Andy, and CEO of the company. Based on what you just said, scaling your company, what are the key components that you need to make sure you have as Wyden to scale and provide the level of quality that is required by your clients?
Yeah, look, I mean, we started with our first round already in 2017. The initial banking clients we had were very instrumental for us. The investor landscape with Truffle Capital, but also SBI and UBS have helped us, receiving the industry regulation. One thing we learned is that the market we are in has very strong cycles. You have these so-called crypto winters like we had in 2017. They come and go. We're going to see the next one. I can't tell you when, but there is going to be a next crypto winter. And what happens during these down cycles is that a considerable part of the population of the startups is washed out, right? And those that make it through multiple of these cycles, they learn to adapt. They learn that even in cycles right now where Bitcoin is around 100, you have to prepare for the next down cycle. You have to remain lean as an organization to prepare for that next cycle.
And also in terms of business model, I think, the type of revenue that you get, you have recurring contracts with those banks. So exactly. As a company as well, it's helps you surf through the cycle of the market, I guess.
Yeah, I mean, recurring revenue, that's what investors love. The bread and butter, I mean, we came from a business of, about 60% services and about 30-40% recurring revenue. And we learned that that's not what investors want to see, so we shifted. Now we're much more a product company. 90% is product, recurring services, license fees. Trading volume fees, in our space, is a very important aspect. We get paid by the amount our clients trade. That's becoming a very important aspect. And then, of course, the service part is still there.
And if you were to have some potential clients in the room just right now, what would you tell them to actually make them choose Wyden, or to convince them that entering this asset class is a good move? Is it like being a commodity for every type of banks in the future? So the real question is how do you see the future of Wyden down the road in terms of scale and for, let's say, the commoditization of entering digital asset space?
I mean, look, I'm a believer that this new asset class is here to stay. Right now, as I said, it's crypto is the only real revenue case. But over the next 5 to 10 years, all types of assets will be tokenized. Real estate, art, company equities. It will all be blockchain based, and that requires a new infrastructure of technological components that banks are now implementing, and we see ourselves as the key provider of this new technology. So we really invest into the product in making these use cases as convenient for clients as possible. There are not too many players globally. There is probably a handful of players. All are currently working on growing the market. We're still at the very beginning. We have, as I said, in Switzerland, about 25 banks. In Europe, the number is very small. Our assumption is that within the next 5 to 10 years, 70-80% of banks will have an offering. And then, interesting fact, we provide technology for crypto and digital assets. More and more, we're now getting requests from banks, hey, wait a minute, we already have you internally. Could you also support traditional assets? Could you support other parts of our business?
Very, very interesting. And just, it's very interesting what you said, because, I've been in this space since 2018, so I felt I was very late to the space. If you're a technologist enthusiast, you always think in 2-3 years it's going to, completely change the market. I think history has proven that the blockchain adoption is going to take longer because it's a very systemic change. I mean, if all types of asset exist on the blockchain, then you have other new type of risk, etc. And banks providing security for their clients, they need to carefully, integrate that. So it's a slower integration that anybody anticipated maybe in 2017, 18. Why would you say for, banks that the timing is now to really, take the topic seriously and start, integrating this new tech that you're providing? Where is it now?
Well, I think that's very simple to answer. The regulation is here now. You can do it. You're not going to go to prison for it. The first few banks are already doing it. In Switzerland, we had this example with Swissquote. That was one of the first banks. They had a huge success. In the first year, 30% of their profit came from the crypto business. So this is a very profitable opportunity for banks. So you have these first few movers. At some point, it's going to be, like I said, 70-80%, and then you have the late movers. So and for a bank, you need to get familiar with these technologies anyway. Blockchain, crypto is not going away. So why not do it now and make it into a revenue case, right?
And if we're getting very practical right now, what would you say the average timing for such a project is in a bank? Let's say I'm a bank, I'm coming to you, say, okay, you convinced me, I want to start doing that. On average, how long it is from the moment I meet a company like Wyden and let's say we're live in production and I can offer this product to my clients?
I mean, look, typically what we see is the actual sales cycle is quite long, as you can imagine, with banking systems. At some point, there's usually an RFP. We love participating in RFPs because that shows us that the bank is serious. They want to launch the project. Once we are signed, we agreed. The actual implementation doesn't take that long. We're talking maybe 3-4 months. Usually there is an extended testing phase, friends and family phase, which is something we encourage the bank to do. You're launching something very new. It's a new technology, it's new processes. And last thing you want is something to blow up on the first day, right? The potential reputation damage could be huge. So that's something we consult with the bank. Even as far as marketing, the marketing campaign needs to be there right on day one, but it needs to convey the right message.
And it's going to be actually my last question. But obviously, if you're dealing with a big bank that has millions of clients, how does the infrastructure of Wyden make sure that it scales for the bank? Because you could, if it's very popular and they did a very good marketing campaign, they can have tens of millions of clients going into maybe a dedicated app that the bank is doing for that. How do you make sure that the infrastructure, can really take the volume of the clients of the bank?
I mean, this is the hard part of building a trading product. We're in banking, we're talking about financials. So first of all, it needs to be safe. Last thing you can afford is lose data. We're talking about people's savings. But then it also needs to be very fast. We're talking about high frequency. There's lots of data points. We're processing literally, if we have 200,000 of orders per second. So the engine needs to work incredibly fast. I mentioned market data. One challenge is in the crypto space, because there are so many exchanges, that the amount of market data you're getting is huge. And there are also huge spikes. A few years ago, there was a situation where the daily average on one day, and the amount of just data points we received was 600 times higher than on an average day. That's huge. I mean, if you're in banking and you scale systems, you scale them to 10 times what you expect on a normal day. Nobody scales to 100% or 600. We survived that day. It was a struggle, though.
So, on top of that, so it's because banks, they take cybersecurity, all those things, in terms of mastering their infrastructure very seriously. So you went from being very on-premise technology to now the launch of Wyden Infinity last year. Could you explain what's the difference and what is Wyden Infinity and why it's interesting for banks?
Yeah, I mean, Wyden Infinity is a new SaaS product. It's really built to serve very large use cases. We're talking tens of millions of customers, millions of trades per day. It's a modern cloud-based architecture, microservices, horizontal scaling, you name it. So it's basically a very modern technical infrastructure. And yes, when we started, it was more or less all on-premise. Now it's all SaaS. I don't think, in the last 3 years, we have one single sale on-premise, like everybody else in the industry. And let's be honest, it's the better operational model for a bank anyway. We know the application. If we operated, and we operated under very clear requirements. There is the DORA regulation now also coming into place. That imposes very strict requirements on how you operate such a system. And because we do it not just for one bank, but for many, we're better at doing this than the internal ops team.
Well, thank you very much, Andy. It was very nice. We still have a few minutes. Exactly. We have a few minutes for questions in the audience if everybody has one on the back. can I take the beginning of the question? I think, we have very good players in Europe as well. I mean, we have Usual, for example, a French-led project on the stablecoin. We have Morpho, which is, a few billions as well. So I think, Gnosis as well. Gnosis Chain is, really, they're doing really innovative stuff. So I don't think it's only in the US. I think it's a very different use case than, just putting banks. I mean, let's be honest. I mean, it takes time, and the asset class itself is the obvious first step into getting to test with the technology, and people just want it. As you said, it's an asset class now, and really serious players want an exposure to this asset class. And we need first to serve that before going into super sophisticated things. I mean, I'm not sure your mother would go into Ondo and deposit some crazy stuff and do liquid staking. I mean, this for very educated players. I mean, the common people that just want to maybe have an exposure in a very safe way. And this is where, as an investor, and this is also why I invested in Wyden, you need to provide a super good experience for that. And banks, with the trust that they have and the quality of service that they provide, are a really good player to be providing this type of service. So obviously this very sophisticated thing is going to come down the line. Regulation as well has to change for tokenized asset. Today, for example, in France, you can tokenize bonds, you can tokenize private equity, but the rest not. So there's still some changes that need to be done, and also for the technology adoption from banks. There's a lot of tests all around, but if you want to do it at scale, you need to make sure that the technology is risk-proof. I don't know if you have elements to add to that.
I think there was one more question. Maybe we have...
You had a question? Maybe there was another question. No?
Please. Yeah, I mean, the priority is definitely on the geographical scale. We focus on, like I said, the jurisdictions with a clear regulation. So, understanding what is required is a big one for us. And let's be honest. In regulation, for a tech company, what are you doing? You're collecting data, and you're providing that in a regulatory compliant fashion through reports. And that's what's our job, right? We make sure that we have all the data points. For example, when MiCA came out and the actual detailed regulation was clear, we went through it. We had tech guys. Imagine that, tech guys reading through a regulation. When does that ever happen? And really brainstorm, what do we need? What are fields, data points, tables that we need? Because we will, our clients will need to provide those. So really try to be flexible, to be able to adjust. We cannot build a system just for one jurisdiction, right? It needs to meet, like I said, Turkey, Brazil, Asia at some point. And that requires quite a flexible technical infrastructure underneath.
Thank you very much. I think we need to be pünktlich. It's Germany after all. So thank you very much for listening, and don't hesitate. We'll still be here and for a few hours. So if you have questions or you want to get in touch with Wyden, just don't hesitate.
Or Truffle as an investor.
Truffle, of course. Thank you very much.